So interesting here is the bounce that we could be, of course, getting a bounce on the 1 hour. We do not believe we are getting a bounce on the 1 hour. It would wants to trick us into giving the implication that this is a that wave 4 ends here, because the bounce here is just lower than internal level 2, really on top of a level 3 in the first place. And why not? Why not? Because we're seeing negative momentum on the 5 and 15 minutes. So it cannot work. Unless we're having good positive momentum on the 5 minutes in particular, the move cannot rise above the shoulder level. And we just check the 5 minutes. It's very dilute. It is exactly at overbought, even slightly below overbought. And therefore, a bounce out of a level 3 will not occur. It's not workable. It cannot do a higher head. Let's check that again in order to understand more. So how am I sure that this is not a higher reversal? Why shouldn't the market go higher? If the market is to go higher and do a higher head, that's why it's always best to go on a confirmation. But from what we're seeing right now, it's almost highly unlikely, almost impossible, because we don't have any positive momentum on the 5 minutes. We have continuous negative momentum at the trigger on the 15 minutes. So this kind of momentum cannot do a higher head. It's just doing a shoulder. Unless we suddenly have a breakout into trending momentum, you want to see levels of 250 reading here on momentum. And right now, momentum is actually below overbought. And therefore, this kind of momentum cannot be trending and cannot drive a bounce out of the 1 hour chart. And therefore, we'll go for the multiple head or for the head and multiple shoulder projection. What you're seeing here, head and multiple shoulder projection, and wave 4 still drags lower. All right, let's take it now to 4 hours to project targets. We're seeing positive momentum on the 4 hours. Yes, I know. We're also seeing positive momentum on the daily, but the feeds are negative. The 5 and 15 are negative, and these are right now what are impacting the market. Everything else is really dilute. So the 30 minutes is neutral. 45 minutes, I believe, we check it, probably neutral. The 1 hour is showing a bounce, but it's probably not going to be really effective. We'll just check that, and therefore we expect continuation to the downside in this momentum plot. On this momentum plot on the 4 hours. Sorry for the interruption. All right. With also now on the 4 hours, it's very interesting to take projections for the current target, because of course we don't want to be efficient and not miss out on the target. The most important, of course, is support 1 immediately. It's a level 3. Right now, the market is bouncing at an internal level 3. This is normal if you're doing a correction A and then a B and a C. And therefore, it is normal for us to bounce out of where I'm holding in the right hand, 194.90, 195, around these levels. But the real target, all right, is going to higher degree level 3. This kind of intervention or very strong correction will attack level 3. And the level 3 here must be, of course, support 1 showing 192.80. All right, so if we're in at around 190, if we're able to be in at 197, right now we're seeing 196, going to 192.80, or if we're in on a trigger, let's say we get a trigger at 196 or 195.90, or 195.50 even, all the way down to 192.50, we'll do, of course, 300 points. So this is the first target. The most probable target is really midway between support 1 and support 2, and I'm looking at targets that should be reached this week in the current move, actually even within the coming 48 hours. So definitely, if we're going to attack a wave 3, we have a lot of shoulder levels here. So we're going to actually break through the upper boundary of these shoulder levels, bounce 50% out of the shoulder levels, and begin to do shoulder levels bearishly translated to the downside. And therefore, we must attack the moving average. So in reality, we're going to 191.50, not 192.50. So look at the target, 191.50. 191.50 is between support one and support two. So we're looking at support one here. Support two is way down, I believe. Support two is way down. Support two is 187. So it's really 38.2% between support one and third support two, maybe even just below support one. So the most feasible target is 191.50. Remember, we are looking at doing this essentially, and not this. There's been a very strong move to the upside, and it needs a lot of correction and consolidation if it is going to continue. So we're really looking at this move, and therefore it's still going to be continuation all the way, probably not only to 190, 150, maybe even 190 and 189.50. But we'll focus first on 190, 150 because this is the target projection, at least this week. I would consider personally to short sterling yen and not dollar yen. Again, because on Wednesday we're going to get the FOMC meeting, and therefore we expect a stronger dollar. And of course, it will be impacting immediately the dollar yen and not really the sterling yen. Would expect a stronger dollar across the board, across all the measures, euro, sterling, of course, yen, and therefore it's best to short the sterling yen and leave our entries in the dollar yen open so that we can long dollar yen if we need to long dollar yen. All right, I believe we are already beginning to show that we are moving to the downside, but still best to go on a trigger. Really, it is best to go on a trigger because the trigger will really diminish everything. Will fix all the risk, will fix everything. Once we have negative momentum on this 5-minute chart, we have a trigger. It is not about really selling the top of the market in as much as you want to really get a strong confirmation so that we are using our money and resource at the right level, in the right trade, at the right time, and not wasting time. Assuming we get a trigger out of this 5-minute chart, it could probably be around the 200-point moving average. We just need to have a hedge at 198.30. We were just did that earlier. It was 198.50, I guess. So we can take it a bit lower. So this is the old one, 198.30. If we have a trigger, it's okay to take it lower to 198.20, 198.30, even 198, because by the time we get the trigger, actually we're going to be below 196. So this is really more than enough. 200 points is a wide stop. Take it down to 197.85. So if we get a trigger, we have a hedge at 197.85. Probably we get a trigger at 195.80 or 195.60. Still going to be 200 points. Nevertheless, the trade is for a target over 300 points because from 195.50 to 191.50, it's actually 400 points. If we are also going to be more efficient, applying, remember, trade operation costs. So remember this, if we have a trigger, this is just 1 hour, but even if we have a trigger on the 15 minutes, it just becomes a 1 and a 2, and we can just buy market, and the stop is just 70 to 100 points below level 2. So over here, assuming this is a 15-minute chart, when we get a trigger, we're going to have an internal 1 and a 2 and a 3. And over here, it shows internal 1 and a 2, where we have the green arrow, and 3. We can just buy market at that point and have our hedge below higher degree level 1 and 2. Will, of course, diminish the risk extremely. or will really diminish the risk very strongly. All right, so if we're going to be using size, assuming we are going to be using size, and we have diminished the risk by using a hedge right below level 2, like we were showing on the past chart, probably next day, maybe next day, we're going to be seeing good money on our accounts, and therefore we'd want to take profits and redo the trade. So for instance, if I go short at 195.80 or 195.70 or even 195.50, it becomes inhuman. I couldn't develop the patience myself personally to hold the trade from 195.50 all the way to 191.50 and 192 here. So we could consider to take profits at internal support 1s and support 2s, especially internal support 2, on a daily basis, and redo the trade. Again, all you need to do as a segregation is always to pick an internal level 3 or an internal level 1, short into it the next day, and go again for support 2. You should be getting something like these red arrows here. Over here, it was a leading diagonal. Now we're in a wedge. This is the only difference. So let's also take this live to relate to it. Right, so at some point, this wedge becomes established. Right now, it is not established. So what would we mean by becoming established? Once we have a trigger, the actual form of the pattern becomes established. So we know that the lower boundary is established. We'll have it a bit higher so that we can take the targets at the correct levels. But the upper boundary is not really established. All right, upper boundary can deviate, can go like this, right? And therefore, once it is established, assuming we get the trigger, it becomes established as upper boundary. All you would need to do is after taking profits the first day, and if this is a trending formation, you never expect to rise above 38.2 of this level, of this wedge. Okay, so the market breaks to the downside, bounces, and does, of course, more, let's say, does a leading diagonal, does some other kind of a continuation pattern. We just need to sell into that pattern. It becomes a level 3, and the hedge must be above 194.50 at this point. If this is the correct pattern, must be above 38.2, preferably, of course, above this internal resistance point.